Good afternoon. Welcome back to the channel. Hope everyone is doing well, enjoying their weekend and nice and sunny Sunday. Everything's doing well here in my neck of the woods. But yeah, I apologize on a little bit of a 2-week hiatus. 2 weeks ago, I was dealing with some health issues, couldn't get a video out. And then last week was, of course, Father's Day. Happy belated Father's Day to everyone out there. And my wife and I were out and about with family, so that is why there was no videos posted in these past 2 weeks. But we're back nonetheless. And in case you haven't missed it, there has been a lot going on, especially in regards to all the news, all the fear mongering, reports left and right. There's just a crap ton of noise going on right now, so it's very important to dial it in, keep your sizes small, and embrace uncertainty. And that's an odd phrase. How do you embrace uncertainty? As a trader, you should always embrace uncertainty. Once you put on that trade, it's out of your hands. Our job as a trader is to be risk managers, not predictors. That is your ultimate goal. Have a good risk to reward ratio, defend what you got, and let the cards play out as they may. Stick to your system and let the chips fall. But if you missed it, Trump approved the bombing of Iran's nuclear facilities. And yeah, we're going to have to deal with that and see how futures open up later on this evening at 6 p.m. Eastern time. Tensions continue to mount. The UN is calling for de-escalation. Trump and the administration claims that this was the only thing that we wanted to do, and that is that. Now, if Iran wants to hit back, then that is a different story. Don't come after our boats is my key term there. Don't ever strike our Navy, because nothing good comes out if you strike our boats. Stay away from our boats. And if you want, just Google all the wars and offenses that we've needed to take on. Usually stems from someone messing with our boats. So don't mess with our boats. Anyway, tensions are mounting, of course. We're kind of waiting to see what Iran's response is going to be. And we got a little bit of taste here. Iran parliament does vote to close the Strait of Hormuz. That is a key strait for energy. There's a lot of oil that moves in and out. Now, when it comes to that, only about 5%, from what I've read, only 5% of the U.S. oil comes out of the Strait of Hormuz. 50% of that goes to China. So China is probably going to be more upset about this than we are. I mean, we're doing pretty good as far as the oil goes. But nonetheless, this is going to impact energy and energy costs. And as a waterfall effect from that could indeed impact inflation readings, which we all know that it has been a battle when it comes to inflation and lowering interest rates. This is not going to help Trump's case for Powell to lower rates. If energy costs go up, everything's going to go up with it. Shipping cost, labor costs, you name it, everything's going to go up because of higher energy costs. So we definitely want to pay attention to crude oil and energy. Now, unemployment rate continues to remain low and labor market conditions remain solid. But the key reason that the Fed has not lowered rates is because everything is so uncertain right now. There's uncertainty about the economic outlook as far as tariffs. There's uncertainty as far as the Middle East conflict, Iran and Gaza, Israel and Gaza, Israel and Iran. So yeah, there we go. That's our main problem. We have a very resilient, strong economy in the U.S. And Europe, they're cutting rates, but Powell and the FOMC committee continue to want to hang in there for just a little bit longer. Now, Powell did say that if it wasn't for all the uncertainty going on right now, they would have definitely cut rates by now, but that is not the case as it sits. Now, when we look at the dot plot from the latest FOMC meeting, the majority of Fed members see rates at about 3.9% at the end of this year, and it's it's kind of a toss up. Some members, a good amount of members actually, see rates staying at around that 4.4%, 4.3%, which is kind of where we are at right now. But yeah, we're looking at one, maybe two rate cuts for the rest of the year. Now, with everything going on, this could very well change, and we could see absolutely no rate cuts for the rest of the year, especially if this continues, if all these conflicts continue to linger longer. My hot take is one rate cut for the year, but we'll see. Now, if we look further into the 2027 and the longer run, we're looking at about 3% as far as the FOMC rates goes. So a lot to digest. I definitely urge you to go to the Federal Reserve website, download this document, give it a good read, and look at the graphs, and you can get a good understanding at what they are looking at and what they perceive as positives within the economy as well as threats to the economy. Or you can hop into my channel, and I got all the details and all the notes in my channel on the Discord. So be sure to check that out. Stay on top of it. I know there's a lot going on. But yeah, the key point is tune out all the mess, all the noise. Don't listen to all the Twitter chatter and all the fear-mongering. Just read the documents and see for yourself. See for yourself. That's all I'm asking. Just see for yourself. Read the documents, look at the data, and come to your own conclusions. And that will make all your stress and worries go away, I promise you. Anyway, let's look at the economic data for this upcoming week. We got a lot of Fed members speaking. This will give us more insight as to, what they were thinking, what they're looking at as far as, why they're not cutting rates, why are they defying Trump, blah, blah, blah. Anyway, we have Fed Chairman Powell testifying on Tuesday and Wednesday with the House committees and congressional committees, so we want to be mindful of that. We also have our GDP for the quarter releasing, as well as our weekly unemployment claims. And then again on Friday, we have our very important core PCE index. That is the Fed's key inflation reading that they are paying attention to. So that is definitely something that we need to be looking at. So all in all, kind of a busy-ish week as far as the economic data goes, especially with Powell coming back on the table, and not to mention all the concerns over the tensions in the Middle East, so to speak. Let's dive into some charts. SPY, here is your daily SPY chart. We can see that we have finally broken down out of this rising wedge. Now, bulls have done a good job at trying to hold this 598. It seems like on the SPX, 6,000 was our magnet. We could not move away from 6,000 on the SPX. Same thing here with the SPY. We couldn't seem to move away from the 600 mark. And finally, we got ourselves a little bit of breakdown with a 12 billion dark pool print. I'm just highlighting that I saw something the other day. And as you can see, we got that breakdown of the falling wedge. Now, if this continues to play out, I'm looking at a minor support around this 593, which is around the low on Friday. We'll see if 593 can hold. If not, yeah, this thing could, come back down and retest 576, which is where we had that nice little gap up back in May. And we did get a retest later on that month, and then we shot up. But yeah, we could see an argument there that if things continue to deteriorate, then SPY could very well come down to about that 576 mark. Bulls need to continue to hold their ground and push up, and especially get away from 600 and push into the highs at about 613. So the game plan right now is, let's see where this market opens this evening as far as future goes, and Monday, give it a good 30 minutes, maybe even an hour, see where things develop, and then, try to get a feel for it. And then Tuesday we can make some more educated decisions about, where the probabilities stand as far as Is the market going to shake this off, or is this something more that we need to be concerned about? But yeah, let's see if 593 can hold. If not, yeah, we could get some woes here, and if that falling wedge does play out, there is some pain to endure. So manage your risk. Maybe have some hedges put on some of your long stocks. Now, not everything's looking bad. The indices, yeah, they look kind of gross. Now, that does create a headwind for all stocks, regardless of how strong they look. If the overall broad market is pushing against you, that makes things more complicated for stocks to run. So you want that tailwind, you want that wind in your back to keep pushing you forward. Qs, same thing. We have this rising channel. We did break down and close below it. Now we do got a little bit of minor support here at about 524. But if 524 starts to crack, then yeah, I'm looking for a move towards 514, 515. And then again, we got this nice little gap that we need to be mindful of right around here. So that's, we got some areas that we can keep an eye on. And then, of course, if the Qs want to break back above 536, if bulls want to grit their teeth and push on ahead, 536 and 540 is the zone that we need to be very mindful of. Now, you could be saying, well, what about, with all this uncertainty and war talk and, all this and that, what about some of these war stocks? Well, RTX, Raytheon Technologies, one of the better looking ones out there. Look at this. I mean, you had the breakout a few weeks ago, 2 or 3 weeks ago, 2 weeks. Yeah, settling in looks great. Now, if we want to say, okay, well, we broke out of this box between 113 and 136, that gives us about a 23-point move. So we can actually measure this out with your three-prong Fibonacci tool, your fib extension. Just double tap the top and look, you got a target of about 160 and 174 as far as overhead target. So if this continues to be something more crazy, then yeah, Raytheon could continue to move higher. Same thing, you want to keep an eye on Lockheed Martin, even though Lockheed Martin's been a little bit more beat up. Boeing is another name that you can keep an eye on. As long as Boeing holds 196, it looks pretty good. You got General Dynamics. That one's also a pretty interesting one as far as war names goes. But key thing, keep an eye on energy and crude oil. Crude oil is looking to make a push towards 80. I know there was some discussion that, crude oil could even make a move towards 90, maybe even 104 was like the highest number that I read on. And I was like, we'll see. Especially if this continues to be a longer term conflict. Crude oil and energy is definitely going to be the key thing to watch. ExxonMobil is on watch for me. You had this nice little breakout, not to mention, I was actually short back here. We didn't get the breakdown, so I got stopped out, and now we've risen as tensions continue to mount in the Middle East. Now, if we get a break above 115, there is a nice little gap to fill towards 118. And finally, if we break above 120, there's a move towards 123. So you got some nice key levels there as far as ExxonMobil goes. You can look at Phillips 66, Chevron. Just take a look at all of your oil and energy names, see where things sit. Now, as far as your Magnificent Seven, I do want to keep an eye on Microsoft. Microsoft has been one of the most beautiful uptrending stocks out there as far as the Mag 7. Fresh new all-time highs. We are getting a retest of this upward trend move. We'll see if we can bounce again and continue to move higher, or if this finally breaks down. Netflix continues to hold pretty darn well. Yeah, I mean, this thing's just impressive. Just continue to buy the dip scenario because it's just not breaking. So until it breaks, buy the dip continues to be the theme here. There's a lot of talk on Oscar Health. This one had a huge run on Thursday and follow through on Friday. Now, if we zoom out here, we can see that we had a descending wedge breakout, and you finally got that high volume conviction move to push on up. Now, you do got some overhead resistance at 23. Above 23, we're looking at about 30 on Oscar Health, and you can actually zoom out here as far as the daily goes because it's still pretty fresh. Here's your IPO high back here at about 37, and you can see where this 30 mark comes in to play here. So above 23, you're looking at 30, and then you can take on the IPO high. But moving on, CRM, this one I have been paying attention to because there's been a lot of dark pool activity going on within CRM. As you can see, like 1, 2, 3, 4, 5 different prints recently. It's like almost every day there's a dark pool print on CRM. Are we, excuse me, let me gather my words here. Are institutions getting rid of their shares or, hedging, whatever you want to call it? Yeah, this thing looks pretty bad and could get a move lower. As you can see, we've kind of made this nice little move down and so forth. So if CRM breaks below 257 or so, we could get a nice little move down to 230. So CRM is going to be on a high watch for me going into next week. Cisco looks like it is trying to break out above 66.50. If we do get that move above 66.50, let me bring my tool here. I'm going to be looking for a move towards that 75 mark. So Cisco has a good chance here. Meta couldn't get above 710, broke down on Friday. Maybe we retest 659.50 on Meta. CRDO got a nice little breakout. You had this rounded bottom, maybe even a little cup and handle, finally breaking out above 85 and closing. I like the looks of this one. If it can have a pretty good day on Monday, depending on where things open, we could be off to the races on CRDO. Looking for a move maybe towards that 100 magnet. That sounds pretty juicy to me. Moving on to eBay now. eBay needs to hold on to 76.55. Consolidating pretty well at the prior breakout level. If it can hold 76.55, I'm looking for a move back up to the all-time highs. Now, when it comes to Apple, it's just kind of stuck. I don't feel like playing with this one too much. You did get a nice little high volume on Friday. Something worth noting, if we can break out of this trend line, maybe we do get a push towards 213. But again, we haven't had that just yet, so it's not confirmed that we need to go long or we need to go short. If it breaks 194, 193.80, then I am definitely looking into this to short. But all right, those are pretty much all the stocks that I am watching. There's a lot of juicy names out there. Zscaler, Hood, continues to be impressive. Helms. If I didn't mention a stock, it doesn't necessarily I'm not watching it. There's a lot of solid names out there that look pretty darn good that I want to keep an eye on. But, for the most part, these are the ones that I'm looking at. I mean, look at Roblox. I mean, this thing's just been, everybody's buying Robux, I guess. I'm not chasing this. I don't want to be involved in this. It's at 100 already after moving off of 50. That's just insane. So I'm not chasing. If you're in on Roblox, heck yeah. Great move. Great job. Trail your stops. Don't be looking to get a bigger home run because you already got the home run. Don't look for a grand slam. Be sure to reduce risk and take some off. Celebrate the win. I mean, goodness gracious, this thing's crazy. All right, that's going to be it for me, guys. Let the markets open up. See where crude oil is at. Let's see where the VIX opens up at. And we will go from there. Cut out the noise. Read the data for yourself. Come to your own conclusions. Take out all that noise from social media, take a break from it, and actually read some of these data points that are coming out. See what the primary sources are saying. What is Powell saying? What are some of these Fed speakers saying? What are the experts saying? I don't want to listen to Bobby and Joe on TikTok or on Twitter who's going on a rant about World War III and all that. Cut all that nonsense out. Go to primary sources, hear what they have to say, listen to the experts, draw your own conclusions, and you'll be better off for it. It will soothe your mind. You'll feel better about what you're doing here in the markets, what you see, and it just improves your overall skill set. All right, guys, that'll be it for me. Let them open up. Let's see what the markets think, and we will go from there. Take care. and pray for those who are in service over in the Middle East. Pray for their protection and pray for their strength as we navigate these uncertain times. All right, guys, I'm Fuzz. Brian, take care. Have a good weekend.